Howdy friends, thanks for joining us for this month's update on our livestock markets. I'm Coulter Brown from the Northern Ag Network. Well, we're going to start things out a little differently than we normally do with this report. As I'm sure you've heard, wildfires in southern Montana and northern Wyoming have burned more than 450,000 acres, just devastating for those producers. Livestock losses are feared to be high for many. Miles and miles of fence is burned up, and the hay and forage that was there to get through the fall and winter is just gone. But the outpouring of support has been amazing. We're seeing farmers, ranchers, rural communities, and businesses stepping up to help those in need. Just some of the things we've heard about: Buffalo Livestock opening their doors to take in cattle and raising $41,000 in a rollover auction. A fencing relief effort started by Bighorn Equestrian Center and MTR Ranch Supply in Buffalo is putting together resources. The Wyoming Rancher Fire Relief Facebook page holding an online auction to raise funds, of which they put together $50,000 so far. The Montana Stock Growers Foundation reopening their wildfire relief fund, accepting in-kind and monetary donations. Stockman Bank has a $10,000 matching grant, so there's all kinds of ways to give. Of course, if you're in the Rosebud, Powder River, or Bighorn County area or want to support those producers, the Rosebud County DES is organizing support there. You can find all this information, and we're constantly updating it at our website at northernag.net. We are going to help these producers rebuild and recover from the devastating fires. Well, before we get into our markets, I do want to thank the sponsor of our report, the Wyoming Beef Council.
Together, we bring more. Beef. It's what's for dinner.
Now moving to our markets. To be honest, August was a pretty tough month for the cattle futures. It actually started at the end of July when disappointment around the Fed not reducing interest rates and broader economic concern with a tick higher in unemployment caused quite the sell-off in the stock market, and that definitely bled into the commodity futures. Didn't stop there though. We continued to see selling pressure for much of August. Live cattle fell below technical support levels, feeder cattle futures hitting new contract lows. Now, the market did bounce back towards the end of the month, but still a lot of ground lost. And it's rather odd to have these bullish fundamentals of tight cattle supplies and pretty firm beef demand, but still see all this near-term economic concern. You can see the month-over-month price movements here. I would mention that feeder cattle futures have fallen $30 since the 4th of July. Of course, with those losses in the futures, we've seen the pressure on the cash market too, just ratcheting lower like the futures have. Live cattle sales, they're down about $9 to $10 from where they were last month, kind of finishing with most of the trade from 183 to 188. Dress sales 17 to 18 lower from 291 to 295. We're in a situation now where we have seasonally large fed cattle supplies. Packers have purchased a lot of cattle for deferred delivery, and they've reduced the harvest pace as well, so not as active in the cash market and kind of backing up the fed cattle supply to some degree. Now, it was kind of odd after the cattle on feed report. That's when we saw the futures bounce back, and that report had a bearish surprise in the placement figure, called it 6% above last year, which was 50% more than expected in placements. Marketings came in 8% above a year ago, which was right where it was expected. That brought total inventory steady with last August. Now, helping out both the cattle producers and especially the feed yards right now are feed costs, in particular corn prices that are moving lower. We're expecting a big corn crop in 2024, and with the soybean market kind of staying below that $10 level as we look out to next year, I think we could see even more corn acres. So I don't know that there's a lot of upside in these corn prices. Of course, hay prices have been under pressure. Last year was a big hay production year, and with a mild winter, we carried forward a lot of hay into 2024. A lot of old crop supplies on the market that had to be worked through, so that's kept the price subdued. We were hearing a lot of hay price from $125 to $145 a ton, and just recently, USDA quoted quite a bit of grass and alfalfa hay from $100 a ton to $125. Now, of course, a couple big video sales in August: Superior Livestock's Bighorn Classic and Northern Livestock Video's Early Summer Special. As you'd expect, with the pressure on the futures, we did see buyers take a step back and prices were lower from the record high sales we saw in July. Now, lighter steers seem to have the most pressure on them, especially some of those 5 weights. 6 weight steers held in there pretty good. Noticeable premiums on the heavyweight weaned cattle. We'll say the value added premiums didn't seem to be as much. Seems like buyers may have filled a lot of their needs there. Certainly more past offers in those sales as some sellers choose to wait for the market to rebound. Generally, I'd say we were down $10 to $20 from last month, but probably about a dime ahead of the same sales a year ago. And if you think back 2 years, we're nearly $1 higher on a lot of these calves. I don't know that we're going to get back to July's prices on the calves before the fall run here, but really you got to keep things in perspective. These are still strong prices. In fact, some of the highest prices we've ever reported. Now moving into the weigh-up cow market, starting to see some pressure there as well, as we're seeing some early weaning and cows coming out of drier country. A lot of the cows right now selling in that 130 to 140 money. As we move through weaning in the fall run, when a lot of cull cows will come to town, there's probably risk to see those prices 115 to 125, maybe some of our thinner cows below $1, but I think we're just following the seasonal trend and not a lot of reason for concern. And certainly we're expecting as we move into the late fourth quarter to see that cow market rally back. Now the lamb market, pretty similar story, running into seasonal pressure, maybe a bit more pressure than we'd like to see. Some of our recent sales, at the Newell sheep yards, these 70-pound lambs from 182 to 216, 80-pounders 173 to 193. Saw a lot of lambs selling the video over 20,000, and they were lower than we'd like, with most of your 75 to 100-pound lambs 175 to 188, some up to 212, and the bigger 100 to 112-pound lambs 164 to 175 and a half. And as we wrap up the report, I think the big question right now in the cattle market is, when are we going to grow these cow numbers? We've kind of transitioned from liquidation phase into more stabilization, but we just don't have the numbers of replacement heifers in the pipeline to replace the cows that are being culled. So I think when we get that January cattle inventory report, we'll have a new cycle low in terms of beef cow numbers. Now, calf prices are in large part incentivizing producers to grow the herd. Who wouldn't want to have more calves at these prices? But when we see the heifer market where it is, there's also incentive to sell rather than retain them for breeding. CoBank says that currently there's a $300 upside to selling a heifer rather than keeping her as a replacement. Now, I think we will see some amount of heifer retention here in the fall, but honestly, it'll probably be 2025 before we're growing these cow numbers significantly. How fast we grow these numbers, that's going to directly correlate to how fast the price falls. Of course, we remember 2015 when the price really dropped off. I don't think we're going to see that situation here. Of course, we're not even growing numbers yet, and we may see a slower growth as there are just a lot of headwinds right now. Of course, political and economic concerns, but also drought, these input costs, interest rates, and the increasing age of the producer. So maybe a slower growth in numbers, which would keep prices elevated for even longer. Lastly here, Cattlefax has put together their forecast for prices in 2025. They're saying we'll wrap up 2024 with calf prices for the year averaging $315, but next year they're quoting higher prices, a 5% increase for steer calves to $330 on the average. Fed steers forecast average $190 next year. That'd be 3% higher. 8-weight yearlings estimated a dime higher at $260. Cull cows expected to average a nickel better at $130, and spot corn futures estimated to range from $4 to $5.50. Well, that's all for this month's report. As we move in the fall run, I think we'll see some pressure on these prices, but really should be less of a price break than we typically would see. Thanks for joining us this month. We'll catch you next time.